Hi, this is Kerry Artak with Wicked Stocks, bringing you the daily Tesla report for Tuesday, March 7th, 2023. Before I click on the charts, if you would, please click like each and every time you watch the Tesla report. Subscribe to the Wicked Stocks YouTube channel if you would. You'll see lots of good stuff every day. And share the content if you would with friends and colleagues. Last week I forgot to actually show this. This is the TLT. It is an ETF that is correlated roughly with, it's a mix of long-term bond instruments, 20-year plus. So you could call this sort of the long bond ETF, interest rate market. As this instrument descends in value, drops in value, interest rates rise. It's inversely correlated with the interest rate environment. So, this channel bottom, I'm telling my TLT subscribers, and by the way, as part of a wickedstocks.com package, you would get this along with a number of other video and analytical videos that I mention all the time. You're probably tired of hearing me talk about it, but here we are. The TLT, this is worth mentioning. We came off of this support nicely last week. It was targeted for the last few weeks, and it is 98.94. If you watch this, it is able to contain selling into April, and from here we can rally. I don't have them all shown here, but there's a lot going on in the low 110s. There's also this channel top that is in the upper, in the very low 100s. I don't want to get too deep in the weeds here, but I'm saying we just recently came off of meaningful support, and the TLT is poised for recovery, meaning the interest rate market, it's been hot lately the last few weeks as it looks like inflationary numbers are holding steady. We've got full employment numbers are coming out, but it looks technically as if this thing can rally back into this region now over the next month or two. And if that is the case, I think the stock market will follow suit, as the interest rate market cools down a bit. But, and this is the big but, if we close below 98.94 at the end of this week, and this is a big week, we've got Fed talk, I think today, Tuesday, if we close below 98.94, we enter another phase of weakness where the next 3 to 5 weeks, couple of months at the most, should then result in a retest of this October low area. In fact, this extreme channel bottom at 91.07. So that would be a continued hot interest rate environment, headline grabbing news, inflationary data, that would probably imply that Friday's employment report is still very strong, so forth and so on. So I just wanted to put this out there. You may watch this as a sort of an intermarket indicator for longer term directional movement in the stock market. And that was a long way for me to say all that. Let me jump to the charts here. Tesla, big picture, came off of long-term support in January, 74.73 to 86.43, well below the market, and above this in part, 244 even remains a 2 to 3 month target. Actually remains a 2 to 3 month target above the 148.91 to 157.02 region, which is an intermediate channel structure we pushed through 6 weeks ago on positive earnings. That set off 2 to 3 months, 244 even. That remains in effect. But we've had trouble here the last few days. We gapped below this channel bottom at 198.56, considered trend defining into later March, below which selling pressures can build and the 150s in reach over the next few weeks. And at the same time, if we close above 198.56, just the opposite, expecting 221.25 probably by the end of next week, and over the next 3 to 5 weeks or less, 245.02. Also know, and this happened in Apple actually recently, if you're an Apple report follower, we had a 3 to 5 day sell signal about a week ago that didn't play out, obviously. We had the buy signal back above that area if you watch the Apple report. But I've been mentioning how that sell signal existed within the confines of a longer-term buy signal in Apple. And you can make the same case here. In other words, a near-term sell signal in the confines of a longer-term bull move, which is true above the 149.70 to 158.10 area, or on the weekly chart, 148.91 to 157.02, that this sell-off, this presumed sell-off over the next couple of weeks is prone to failing on the way down. One of those levels, the next key level, and we talked about this last week actually, is 183.53 today. This level may well be in reach. Hi, if you enjoy watching our daily Tesla report, you'll love our daily Triple Q and SPY reports. They're presented in the same 5 to 10 minute video format. Our daily SPY and Triple Q analysis provides directional market signals that are correlated with highly specific price support and resistance levels. Whether your trading time horizon is short or longer term, we promise you a distinctive edge in your trading of the SPY and Triple Q. We offer a 5-day, no questions asked, money-back guarantee. So go to wickedstocks.com right now and start receiving your daily SPY and daily Triple Q reports today. I do have 190.90 as a soft intraday pivot point. That is nothing more than the settlement price from last Thursday, which is the move low settlement price following the high in mid-February or so. So 190.90 offers decent intraday support. In other words, aggressive day traders can buy this in anticipation of a possible intraday rally back to 198.56, but also know that continued settlements at or below this 198.56 channel bottom will keep this 159.13 rising two-thirds speed line in reach over the next couple of weeks. And so that said, breaking or opening today below 190.90 shouldn't come as a great surprise. And if so, 183.53 is in reach. So that is the other day trade. Breaking 190.90, playing the short side down to 183.53, where profits can be taken, and you could even enter a long position if there's enough time left in the day. If there's a couple of hours left, we could get a nice bounce here by the closing bell. But also know that if we settle below 183.53, we may be 3 to 5 days away then from reaching this targeted 159.13 rising two-thirds speed line, which is presently still coinciding with this band of long-term support, where the buy signal up in the 240s played out about 6 weeks ago. So this is still a zone of long-term support, and that speed line precedes it. So for the time being, I'm still respecting this as a significant 4-star support level at 159.13. So that kind of covers the downside. Let's talk upside, that in the event we push or open today above 198.56, well, I've got 206.42, and I've reduced that to an intraday resistance, as you can see here. It was a session containment level when this wedge was further apart, but it wouldn't take much if we pushed, especially if we opened this morning, or Tuesday morning, I should say, above 198.56 for reaching 206.42 on an intraday basis. This may be it for the day, but with a rejection of this meaningful sell signal may come with it not only meaningful short cover activity, but also new long entry. And pushing through 206.42 wouldn't surprise me if we, especially if we opened today, Tuesday, above 198.56. Yes, 206.42, then a serious hesitation point on an intraday basis. But if we push through 206.42, the high settlement price in February, the high settlement price period following the January low at 214.24 would then be in reach. That would be a significant rally today. I'm not anticipating it, but I'm just kind of giving you my rationale for reducing 206.42 to a mere intraday resistance level. Still an aggressive short sale zone, still an aggressive area for taking long entry profits above 198.56. Bottom line, if we close today above 198.56, we're back in the bullish camp, as I mentioned earlier, with respect to the 1 to 2 week and 3 to 5 week time horizons. By the end of next week, 221.25, that long-term 3/8 Fibonacci that we came very close to testing a few weeks ago, 221.25 can contain weekly buying pressures, but I think on the next attempt, it might contain just a few days before we settle the week above it. 221.25 if settled above, then the 245.02 level expected within just another week or two of trade. 245.02 is the daily channel top to the weekly channel top that is all week long at 244 even. This upper area, if tested, and once again, let me just finish making that point. I don't want to let it get by, that if we close above 198.57, 198.56, 245.02, which is a 2 to 3 month target anyway, there's 6 weeks left in that 2 to 3 month buy signal, by the way, may be realized within 2 to 3 weeks. And that 245.02 or in other words, 244 even on the weekly chart, able to contain quarterly buying pressures when tested. We could fall off from here into later year, and if settled above, would present a significant longer-term buy signal for Tesla as we move through the rest of the year. I'm going to leave you with this chart. This is the most relevant for the day. And I'm just going to quit talking. That's really all that needs to be said for Tuesday's Daily Tesla Report. You have a great day.